Peace and love, everybody. This is Young Nas from iGotOptions LLC, and in this video I want to talk about why trading is mostly psychology. So for the most part, when it comes to buying different assets on the stock market, what's driving these stock prices up and down? Yes, it's people clicking that buy and sell button, but why? It's because of their mentality, or it's because of their psychology, what they're planning in their head. All right, now you'll frequently hear me and other traders talk about getting your headspace in check. All right, you don't want to be an emotional trader whatsoever, because once you start letting yourself operate based off of your emotions, whether you're angry, mad, upset, sad, depressed, that's going to completely mess up your trading account in the long run. All right, so with that being said, it's important to make sure your own mentality is in the right. But then after that, the second most important part is understanding the psychology of other investors. Now, I'm not talking about any regular investor. I'm talking about those top-notch investors that have billions of dollars in different assets. Now, the reason I say that is because when it comes to trading, you have to understand that when it comes to these different hedge funds and different financial institutions, when they have a gang load of money, they have the financial power to cause these stocks to go crazy. So with that being said, we have to study how these institutions and how these top-notch investors operate. And to do that, you have to understand their psychology. All right, that's super important. So I'm going to give you an example. On Monday, lots of stocks in the banking industry like Bank of America, Morgan Stanley, they were very bullish on Monday. Now with that being said, you may not understand why. And the reason why is because it ties in to what President Biden said on Monday. And what he said was that he would be nominating Jerome Powell of being the chairman or leader for the economic feds. All right, now I have a video explaining what the economic feds are, but this news ties into the banking industry because basically what people know Jerome Powell to do is to say whether they're going to raise interest rates or whether they're going to lower interest rates. Now with that being said, when interest rates go up, banks profit and vice versa. So with that being said, Jerome Powell has mentioned in the past how they're planning on tapering, all right, which is basically them trying to get the economy back into its normal shape. And to do that, they have to raise interest rates. So as a result, that's going to cause the banking industry to profit the most from that. And so that's what caused investors to want to put their money into all these different banking stocks, causing those stock prices to go up drastically. Now with that being said, I understand that a lot of people who are new to stocks and investing may not fully understand how I even made those connections, and don't worry about that, it'll flow with time. And I have videos breaking down how I make these type of connections. All right, but you just have to understand that it really is a psychological game. Not only do you have to take in consideration your mentality, but also other investors' mentality. All right, so with that being said, this is why psychology is essentially the most important aspect, or one of the most important aspects of trading. All right, peace.